Hello everyone, this is Hovig at LBC Mortgage. We want to bring you the interest rate updates today based on what the Fed and the meeting came out today. So it's important to understand where the interest rate is going to be for our purposes as real estate professionals. Please don't forget to subscribe to our real estate LBC channel. We're going to be doing the weekly rate updates going forward. So today the bond market was kind of on a steady, on a very leveled until the Jerome Powell talked about the interest rates and the projection of the markets and the inflation and all that. So this morning I actually emailed all of my colleagues here that let's lock the loans before he talks, because given the market situation and based on the charts, I'm a chart guy, I'm not a fundamental guy, so I'll show you guys my charts one day, but based on the charts, my projections were that the bond market is going to drop after he talks, and that's going to give us the opportunity before he talks, it's going to give us the opportunity to lock in some rates, because when the bond market drops, the interest rates go higher. And going forward, my projection is that the interest rates are going to go higher based on few factors. What are those factors? One of the factors is the bond buying. The Fed came out today and they've already started the tapering of the bond buying. And today they even accelerated that to the tune of, I believe, they're going to lower it by 60 billion a month. That's huge. They're going from, they were doing like 15 billion every 3-4 days to 6. I mean, they're going to lower it considerably. So what that means is the demand for the bond market, it's going to lower now. When the demand is low, then the prices go higher. And when the bond prices go higher, of course, the interest rates go higher. So for our purposes as a real estate professionals. So that's one of the things, the reason I'm not bullish on the rates. It's the bond buying that they came out. And that's going to continue, by the way. The second item is inflation. Based on what they told us today, if you guys were following, the inflation was at, they projected at 5.3%. That is huge. We've never seen anything like that in the last 39 years. 5.3% inflation. And the Fed is telling us that that's temporary. From a consumer perspective, I have a hard time believing that. Maybe the 5.3 is temporary, but 5% is permanent. So inflation is there to stay. The other thing, the bond prices. Again, as the bond buying decreases, the bond prices will go higher, and interest rates will go, the bond prices will go lower, the interest rates will go higher. So to cap it up, and I want to keep it simple, how does that affect us as real estate professionals? Where do we come here in terms of what type of decisions can you make based on these factors? Now, these are very complicated factors. We're trying to keep it as simple as possible. One of the things we have to look at, okay, based on this, where is the investment opportunity for us? I believe the investment opportunity right now is in real estate. Why? Okay, and I'll give you guys a few reasons. So the investment opportunity based on this is still in real estate, even though many people think the prices are high. Yes, the prices are high, but if a savvy investor does their homework, they can find opportunities out there because the rates are still pretty low. Think about it. On an investment property right now, there are programs in the market. You are borrowing at 3.99% with 20% down. Sometimes, believe it or not, with no doc programs. Okay, so 3.99% in today's economy, where the inflation is 5.3, that is free money. So we need to take advantage of this opportunity to increase the investment portfolio. So that is the biggest opportunity given today's market. So real estate-backed securities, those are good opportunities. But for us as smaller investors, we can always jump in on the real estate side for refinancing. Like for example, you could do a non-owner property just for investment purposes. Anywhere in California, that's an option. And the second thing, you could refinance right now to pull money out and to invest into other real estate and few other opportunities that I don't want to go into right now. But that's the main picture based on today. The opportunity based on the economy is in real estate. That's all I've got today. If you guys have any questions, please don't forget to subscribe to our channel below, and you guys could ask questions. My number here is 818-309-2999. I'm available here at LBC all day long, every day. So anytime you guys have questions regarding this or in general, I'll be more than happy to talk to you guys. Thank you again. Have a good afternoon.
Question from the cameraman. So
yes.
Up or down on the timeline?
The rates based on timeline, I believe the next month or so they're going to go higher, and it's starting today actually. So about a month or so they're going to go higher, and then because the reason is what's going to happen with the stock market, it's going to have its Christmas rally, and then the bond market, it's going to drop, and our rate's going to go higher. Okay, and that's going to take about 60-day period.
Thank you, Hovig.
Okay.
Thank you.